welcome to the Deep Dive. This is your shortcut to getting really well-informed, packed with those surprising facts and insights that, actually stick. Today, we are diving deep into the evolving world of real estate investment. We're going to focus specifically on multi-asset real estate funds. Yeah, we're going to unpack how these funds are, well, not just diversifying portfolios, but also pulling in massive amounts of capital and, maybe surprisingly, embracing some really cutting-edge innovations. Our mission here in this deep dive is to pull out the most impactful nuggets from the sources you've shared, give you a clear, concise understanding of what can be, let's face it, a pretty complex area. But it's also fascinating. And you might be surprised how things like social responsibility, even cryptocurrency, are starting to reshape traditional finance. Okay, let's unpack this. Let's get to the heart of what makes these funds so powerful right now. So when we talk about multi-asset real estate funds, we're not just talking about another investment option.
No, not at all.
These are sophisticated powerhouses, really.
Right.
Primarily serving institutional investors and ultra-high net worth individuals.
That's right. They're built for the big players.
Yeah.
And they're designed to do more than just, grow capital.
Okay.
Their real genius, I think, lies in optimizing those risk-adjusted returns. They do that through really dynamic asset allocation.
Right. So beyond just the basic idea of, don't put all your eggs in one basket.
Exactly. It goes way beyond that. The core benefit here is leveraging strategic diversification and, critically, across uncorrelated cycles.
Uncorrelated cycles. Explain that a bit.
Well, these funds spread their exposure across a really wide spectrum of property sectors. You've got commercial, residential, industrial, and increasingly you're seeing niche assets too, like healthcare facilities, data centers.
Okay.
What's truly insightful is how they capitalize on the fact that each of these sectors responds, differently to macroeconomic shifts. So when residential might dip, perhaps industrial surges, it provides this sort of built-in counter-cyclical protection.
Ah, okay. That makes sense. Something you wouldn't get with just single-sector investment.
Precisely. It's much harder to achieve otherwise. And what's even more fascinating is how this intelligent diversification also reinforces real estate's sort of natural inflation-hedging properties.
Okay, so it's defense, but is it also offense? Looking for growth?
Oh, definitely. It's absolutely not just about protection. It's about actively identifying and seizing growth opportunities. Think about the boom in, say, technology-driven logistics hubs, propelled by e-commerce.
Right, massive growth there.
Or the steady demographic-driven growth in senior living facilities. These funds are positioning themselves to really capture those specific high-growth trends.
That makes a lot of sense, sort of building resilience by riding different waves at the same time.
Yeah.
But let's zoom out a bit, away from just the sectors themselves. What about the broader global picture? How do huge external forces, things like global investment flows, immigration patterns, even shifting geopolitical dynamics, how do they actually shape these complex investments?
That's a crucial point. If we connect this to the bigger picture, it's absolutely critical that these funds proactively integrate those global investment flows with current immigration policies, evolving geopolitical landscapes. You have to watch everything.
So it's not just about the buildings themselves.
Not at all. Aligning real estate fund strategies with these macro factors lets investors not just tap into high potential emerging markets, but also secure and preserve capital in stable, developed economies. So it enhances both capital preservation and growth potential. It's about anticipating shifts in capital movement and demand.
And are there tools to help manage that complexity?
Yes, definitely. For example, platforms like Aylin are providing quite sophisticated digital tools now. Things like AI-driven market analysis for cross-border deals, automated compliance checks. These make navigating those complex global waters far more efficient and, more strategic.
Okay. Now, I have to admit, when I first saw cause-related marketing on our outline, for something that's traditionally, hard-nosed as real estate investment, I did sort of raise an eyebrow.
I can see why.
So here's where it gets really interesting for me. How do these two seemingly opposite worlds actually intersect? And what's the tangible benefit? Is it real?
It absolutely seems counterintuitive at first, doesn't it? But cause-related marketing, CRM, plays a pivotal and I'd argue economically impactful role in elevating brand image for these fund managers.
How so?
Well, when these funds genuinely demonstrate social responsibility, maybe through sustainable building practices or robust community engagement or deep ESG integration, They build much stronger emotional connections. And crucially, that's with all their stakeholders.
Not just the public, but investors, too.
Exactly. This isn't just about appealing to end users or consumers. It extends directly into investor circles. Corporate responsibility, particularly clear ESG commitments, environmental, social governance.
Right.
It's rapidly becoming a non-negotiable metric for sophisticated investment decisions. People are demanding it.
Is there data to back that up, the financial impact?
Oh, yes. The economic data here is incredibly compelling, actually. Firms that authentically emphasize social and environmental causes. They report up to 20% higher consumer engagement scores. And crucially for this discussion, up to 15% increased investor commitment compared to their peers who don't.
Wow, 15%. That's significant.
It really is. This isn't just feel-good marketing. It translates directly into measurable uplifts in fundraising velocity and better capital retention rates for these funds. And using specialized digital platforms helps them amplify these messages and provide transparent, verifiable ESG outcomes that really reinforces trust and accountability.
So that's the why. And yeah, that data is pretty convincing. But I'm curious, what are the biggest hurdles funds face when they try to actually implement these cause-related campaigns? And maybe what are the concrete, practical steps they take to do it right? So it doesn't just feel like greenwashing.
That's a great question because authenticity is absolutely key. The biggest hurdle, often ensuring genuine alignment and, importantly, measurable impact, not just talk. So, to counter that, the practical steps usually involve, first, establishing truly authentic, measurable goals. These need to be deeply aligned with the fund's core business values and, critically, with what investors actually expect.
Okay, alignment first.
Second, they often utilize advanced digital platforms for data-driven campaign management and real-time impact tracking. This lets them show, not just tell, their progress.
Makes sense. Transparency.
Exactly, which leads to the third point. Transparent communication of ESG outcomes is vital. It builds credibility, stakeholder trust. Fourth, they actively leverage cross-sector partnerships. Collaborating with NGOs or local governments can amplify both the social impact and their market reach.
Okay.
And finally, and this gets back to your point about hard ROI, it's essential to measure the return on that investment. You need comprehensive metrics. Tracking increased capital inflows, yes, but also consumer engagement rates, shifts in brand sentiment from independent analytics. You need the full picture.
Got it. So it's measurable, strategic, not just philanthropy bolted on.
Percent.
Okay, so if social responsibility is unlocking new capital, what about technologies that might unlock even greater liquidity, maybe completely new investor pools? Let's fast forward now to the frontier where, algorithms meet acres. What revolutionary role is cryptocurrency starting to play here? Is it really the game changer some claim it is? Or is it maybe more buzz than substance right now?
Well, this definitely raises an important question about, truly future-proofing portfolios. And while there's certainly a lot of buzz,
Yeah.
the rise of certain cryptocurrency innovations like Gold introduces genuinely transformative possibilities for real estate investment. I think it goes far beyond just hype.
Gold. Okay, tell me more about that. It's not just Bitcoin for buildings, right?
No, not exactly. Gold isn't just another crypto coin. It's positioned as a tokenized asset standard. It's built on a specific blockchain, and it's designed to mirror the value of physical gold.
Okay, like a stable coin, but for gold.
Sort of. But the revolutionary part is how it potentially enables direct programmable exchange between traditional assets like, say, tokenized real estate and digital assets.
Tokenized real estate.
Yes.
So breaking ownership down digitally.
Exactly. Imagine being able to liquidate a tiny fraction of a skyscraper almost instantly. Or think about a new way for small-scale investors anywhere in the world to collectively own a piece of prime real estate.
Wow, okay.
That's the kind of liquidity and access something like Gold could unlock. It could fundamentally reshape who can invest and how they invest.
That does sound transformative.
It really is a critical development, potentially, for real estate funds aiming to attract more diversified capital pools. By integrating crypto assets, or at least the potential for integration, these funds are effectively opening or preparing to open liquidity channels that were previously inaccessible to many investors.
So it broadens their appeal, makes them more resilient.
Exactly, broadens investor appeal, and could make their portfolios significantly more resilient and agile in, future market shifts. It's about being ready for what's next.
So what does this all mean for you if you're trying to understand the cutting edge of investment today?
Well, we've seen the immense power of multi-asset diversification, right? Not just to lower risk, but to actively capitalize on different market movements.
Definitely.
We've explored that strategic integration of global dynamics with real estate, recognizing how shifting populations, geopolitics, these are now foundational to investment success.
Can't ignore the macro level.
And we've uncovered the surprising financial leverage, really, that authentic cause-related marketing provides, turning purpose into actual profit.
Yeah, the ESG and CRM link is stronger than many think.
And let's not forget the truly innovative potential of crypto assets like e-gold potentially, which are fundamentally reshaping ideas around liquidity and accessibility in ways we haven't really seen before. It's a lot to take in, but remember, knowledge is most valuable when it's, understood and applied. This deep dive, I hope, reveals a really nuanced world where those traditional investment principles are not just coexisting with, but actively converging with social responsibility and genuinely groundbreaking technological innovation.
So here's a final thought to leave you with.
Mhm.
As these lines between traditional finance, social impact, and digital innovation continue to blur, how might these trends reshape not just investment portfolios, but maybe the very communities we live in?